What's going on, everybody? Andrew here. Today I want to be showing you guys my stock portfolio. I started this account in about April in 2019. I built my way up all the way to about $22,000 at my peak. And what happened here was I was trading credit spreads on big tech companies, on Google, Amazon, and SPY, and they all dipped at the same time. you can definitely tell at its peak. I was bullish on them, so I ran put credit spreads, and they all dipped around the same time. All just came tumbling down on me. I lost about, well, first I made about $1,000 in a week, pretty much. And because since I was greedy, I didn't take profits early, and so I didn't sell all my put spreads by expiration, but a lot of them I lost money on. I had to cut my losses, and I lost my whole premium on one of them. And since I did that with my goofy self, I lost about 1,000 for my credit spreads and 1,000 in just my stocks being valued less. So yeah, I got spanked a little bit, but it's okay. I'm a new trader. I just started doing that credit spread strategy about 2 weeks ago. I got a little greedy, leveraged a little bit too money in, and you know, that's his life. It just happens sometimes. So my first stock I want to show you guys that I own is Tesla. Average cost is pretty low at 85. It's only at 370. I'm hoping to buy this stock a little bit more before it comes back up to its peak at $500. Hopefully, instead of being up 300%, I can be up 700% like I was. But time will tell. So next up stock we have up today is Apple. Now Apple is a gigantic tech company. It's never going to run out of business. They always innovate their products. Well, customer base will always buy their products even if they take away chargers and stuff. That's just how it is. Apple users are most likely never going to switch to Samsung. I'm only up about 70% on them, about $1,000. They have a 0.57 dividend yield, which isn't too bad. About 2 trillion market cap. That's very big. A lot of people buy and sell this stock. So it's a pretty good indicator that this stock grows a lot. It's almost up 300% over 5 years. That's insane. About 60% a year. So no wonder why this stock is, besides Tesla, is really carrying my portfolio. Jesus. Next up we have up is Bank of America. Nice steady growing stock. Has 3% dividend yields. Netted me $14 this month. It's pretty decent. Basically breaking even on them though. At its peak for Corona, it's about $35. I bought it around that price a bit earlier than that, but now I have to. I've been lowering my costs all the way down to $25, so I'm at a really good price. Hopefully it'll come back to over 35, so I can be up maybe 20-30% in a year or two. That would be pretty good. Next up we have is McDonald's. Now McDonald's is a fast food giant, the most popular one. It has about 2.5% dividend yield, market cap at about 162 billion. The stock grows pretty steady. It's pretty good in recessions. Doesn't move too much. Well, it doesn't swing that much. It pretty much only grows. It dips every once in a while, but yeah, stocks only go up in this one. Only have about 7 shares. Stock is kind of hard to buy into because it's so expensive, like Tesla. So I try to use fractional shares to buy into it. If it's at a good price, I'll maybe throw in $50 to $100 in a week if I can. But especially if a lot of my stocks crash, yeah, I'm definitely pulling in money out of the bank. Have to. So we have is Coca-Cola. This one's pretty safe. It doesn't move too crazy. Its peak is about $60. I lowered my average cost again to 45. It's only 7% of my portfolio, up about 11%. Not too bad. Dividend yield is 3%. Now, what I like about this stock is it pays its dividends pretty consistently. The company doesn't really cut them, so it's pretty consistent. A little bit of growth, a little bit of dividend. It's not bad, not bad at all. Next up we have is AT&T. I'm mostly buying this stock for its dividend yield. It's pretty high at 7%. It's down a little bit. Or 11% in 5 years. It really got hit hard by Corona. It's pretty cheap. Hopefully it'll come back up to a $40 range so I can buy more, get my dividend yield, and we'll be good. Next up we have is Disney. For the most part, I bought this stock when it dipped because of Corona. It was at a really good price. I couldn't really pass it up. So even if I don't want to hold this stock long term, I can always sell it and put that money into credit spreads to make even more money. I'm only up about 24%, $109, like 3% of my portfolio. I don't really buy into this one a lot. Dividend yield is 1.34. It's not too bad. It's not really that good either. But hopefully the growth on it will be really good over the years. It's just Disney just owns everything. It even owns Star Wars. The thing I want to achieve on my portfolio is I'm going to be investing long term. I want to be buying and holding. Basically never going to be selling into these companies. I'm going to be buying and holding these stocks for pretty much the rest of my life. I'm going to keep as much gains as I can. But what I'm also going to be doing is selling premium with credit spreads to just increase my income a little bit. If you're really careful with credit spreads, you can even double your income. But just don't be like me. Don't try to over leverage too much and lose 30% of your portfolio in like a week. Actually, no, it wasn't a week. It was like a day or two. Lost everything. Yeah, 347. Just dipped. Well, if you guys enjoyed the video, please give me a like. I want to be trying YouTube. We're gonna see if I'm gonna be consistent because I don't really ever have time and I'm kind of lazy. All right, everybody, have a good day. Peace.